Hi, let us calculate a depreciation on vehicles. So here on J they say make provision for depreciation as follows: on vehicles at 15% per annum on cost. So here on I we are given an information about the vehicle that was sold during the year. So they say an old vehicle was sold for cash on 31 October 2021 for 43,900. No entries have been made. And then the fixed asset register revealed the following in respect of the vehicle sold. The depreciation for the current year, 24,000. So we already have the depreciation for the vehicle that was sold. And then, okay, we have carrying value and profit on sale of an asset. So we want to find the depreciation for the vehicle that is remaining in the business that is not sold, or an old vehicle. So on our table here on the balance sheet account section on our pre-adjustment trial balance, we are given vehicle on cost, which is 520. So this 520 still includes the vehicle that has been sold. So we have to find the vehicle that has been sold so that we can subtract it from 520, so that we'll be able to calculate the vehicle that is remaining in the business. So because we have depreciation for the sold vehicle, it becomes easy for us to find the cost. So it means we have to use this depreciation to find its cost, like the original cost price of the vehicle, so that we can subtract it from the cost of the vehicle, which is 520. So to get depreciation, we say cost price multiply by percentage multiply by months, right, is equal to our depreciation, right? So cost price we don't have, but we have percentage, which is 15%. So for how long did we have this vehicle before we sold it? So we sold it on the 31st of October. Here is 31 October 2021. And when does our year end? Our year ends 28 February 2022, meaning it begins 1 March. So March, April, May, June, July, August, September, October. So we had it for 8 months before we sold it. 8 over 12 is equal to, and then what is our depreciation? So here is our depreciation, 24,500. So depreciation is 24,500. So our cost price multiplied by, so what is 15 multiplied by 8? 15 multiplied by 8 is equal to 120. So it's 120 over 100 multiplied by 12. So it's going to be 12 we add the 2 zeros. So it's going to be 1,200 is equal to 24,500. And then CP multiplied by that is going to be 120 CP over 1,200 is equal to 24,500. And then here is obviously over 1, so we cross multiply. 120 will multiply with 1, which is going to be 120 CP is equal to 24,000 multiplied by 24,000. Okay, let's write it down. 24,000 multiplied by 1,200. So here we're going to have 120 CP is equal to, okay, we have 120, let's say 1,200 multiplied by 24,500. So we have 29,400,000, 29,400,000. And then we're going to divide both sides by 120. So we're going to have CP is equal to, so this amount divided by 120, 245,000. 245,000. So this is the cost price of what? Sold vehicle. Okay, so cost price of sold vehicle, we found 245,000. So we have the total cost price of the vehicles, we have 520. So we have to subtract the cost price of the vehicle that was sold. So 520,000 minus the 245,000 that we found of the vehicle that was sold is equal to 520,000 minus 245,000. We have 275. So we're going to have 275,000, and then now we can calculate the depreciation. 275,000 multiplied by, we were given 15%, right? Which is equal to, multiply by 15%, 41,250. 41,250. So it means the depreciation of vehicles will be 41,250 plus we were given here the vehicle of the depreciation of the vehicle that was sold, which is 24,500 plus 24,500 is equal to, so here we already have 41,250, then we'll add 24,500, so we have 65,750. Now this is the total depreciation for the vehicles, the one that we sold and the one that's remaining in the business that wasn't sold, or the old one.